Structurally on chain, it's not a bear market setup, even though I would say we're at peak fear.
Willy Woo, a popular Bitcoin on-chain analyst, has answered the crucial question of whether Bitcoin is in a bear market or not. The New Zealand investor and cryptocurrency advocate has declared that we are not in a bear market yet. He explains that past bear markets had certain indicators that he is yet to see in this cycle. Willy Woo also states that most investors on major exchanges have been hodling for over 5 months. The whales and institutions involved in the late 2021 sell-off have also started accumulating more Bitcoin for their balance sheets. The whales are returning, most retail investors seem to be waiting for a proper blow off top, and the demand for Bitcoin has resumed and seems to be climbing higher. According to Willy Woo, all these indicate the opposite of a bear market. Welcome to Savvy Finance. In this video, we examine Willy Woo's thoughts on whether we are in a bear market or not. The analyst believes current market indicators are not pointing at bear market. He also explains how the market is slowly turning around. Please watch the video to the end so you don't miss any of the important indicators that the on-chain analyst discusses. Also, remember to give this video a thumbs up, subscribe to the channel, and turn on post notifications. Enjoy! Willy Woo has clearly answered the question of whether this is a Bitcoin bear market or not. To answer the question, he explains that past cycles have shown that bear markets occur when noobs populate the market. These types of investors are not hodlers. They just want to rush in, sell off, and make a quick gain. So when you have a lot of people trying to sell off their coins at once, the market crashes. On the other hand, if the market is adequately balanced or has more old hands or hodlers, things progress at a much slower pace. This is because hodlers are comfortable holding on to their coins until there is a bigger rally or even an ATH. Listen to Willy Woo's explanation about bearish indicators and signals.
Could we be in a bear market?
Not if the past repeats, right? Every time we've seen long-term holders holding most of the coins, it's structurally set up for it to run upwards. Bear markets happen when everyone who's holding the coins are noobs. And when you say like long-term versus noobs, it's basically how long are those coins been aged in a wallet. So if you look across all the wallets on the blockchain and you go, look, how old are these coins before they move? How long have they been sitting in these wallets? It goes through cycles, and these tight cycles where most of the coins have been sitting there for more than 5 months. It's a very strong setup, which is what we got now. It's at peak levels of these coins. The coins across all of the network have been sitting there, most of them, for more than 5 months. They've held on for 5 months. They're not selling. They're not selling at a loss. They will sell when there's profit be had, and you'll see that whenever it breaks out of like all-time highs and does a really strong rally, those guys that have been holding for 5 months start to take the money, and they take cash that's available. They cash out, they take the profit, and eventually new guys that are coming in to buy the rally, they're the new guys, and they want to get rich too.
They're the bag holders.
They're the bag holders. But what typically happens is it's very vulnerable to a bear market because some of them sell, right? They sell. Like the 2018 bear was at peak new guys holding the coins. And the cycle repeats. Those new guys either sell, or the ones that don't become hardened hodlers, and they sell on the next rally when it goes even higher. So it's just like old hands, new hands become old hands, and it's back and forth. And we're in the old hand situation. We went rallying from 30,000 to 69, and we did see a little bit of sell down from those 5-month old holders, and they took some profit. And then as it sort of crashed down, let's say slide, it wasn't a crash, it was slid down. They, lo and behold, around about 40,000, low 40s, they just stopped selling. They've stopped selling for actually a number of weeks now, and actually you could say they're accumulating, or in other words, some of the new guys have sort of aged to the 5-month zone and they're becoming old hands.
Willy Woo also explains that the on-chain indicators remain structurally sound and that, in fact, things are beginning to make a turnaround. Starting from investors that initiated the sell-off of late 2021, Willy Woo explains that the sell-off has ended and that they are back to investing in Bitcoin. With the return of the whales, he adds that the few investors who sold over the past weeks are returning. If the demand continues and there is enough buying pressure, Bitcoin's support level will be stronger against bearish movements. Here is Willy Woo explaining how the market might be taking a positive turn.
Structurally on chain, it's not a bear market setup, even though peak fear, no doubt about it, people are really scared, which typically is a time to it's an opportunity to buy. You don't often get this kind of pullback without it relief bouncing even. It's not You don't sort of slide, and then capitulate. You know, we've come down from 69 to 33, and it'd be hard pressed to capitulate from 33 down to say 20, because that's like retracing something like a 2018 bear market over two and a half months instead of a year, right? Anyway, like structurally it's very, very strong, and demand started to come back in. The hodlers that were slightly being dispirited by the futures traders selling down have stopped selling. They're rebounding now, and there's accumulation coming. The whales are now, and when I say whales, these are guys with more than 1,000 Bitcoins. So I term a lot of those guys as potentially institutional investors. They're starting to flick over to buying, right? They peaked their selling in December. So you could say institutions were selling down in December, which is kind of a part of their normal cycle. They sell down, they redeploy in January. Looks like that started. The whales are coming in. The futures coming off the CME and ETF, and you know, all the other futures exchanges. But I primarily think that the CME and this futures ETF drives a lot of this now. That demand started to come in. It started to come in a few days ago. So yeah, like most of this week, demand started to come in, and for weeks on end, it was just toxic. There was just no demand. It was like divestment. It seems pretty cheap right now.
Experts seem to be divided on the issue of whether in a bear market or not. While some believe the cycles have only lengthened, others believe we are in a neutral market, while some others believe we have entered bear territory. As Willy Woo points out, on-chain indicators might not be pointing at a bear market, but the Bitcoin Fear and Greed Index has been in the red for the best part of the year. At the peak of the dip, the Fear and Greed Index went as low as 13. It improved a little over the past few days, measuring around 20-29, but it is now back to 20. It clearly indicates that investors' sentiments are not particularly high right now, but there are many things that could be responsible for that, especially the increasing fear of regulations and high inflation. What do you think? Are we in a bear market yet? Please share your thoughts in the comment section below. Also, remember to give this video a thumbs up, subscribe to the channel, and turn on post notifications. Thanks for watching.